If a client comes to us and they've already made their investment or they've already sold an investment and they haven't done it in the most beneficial way, can anything ever be done to help improve that situation? Hello and welcome to Crowe Corner with Business Solutions. Today, Nasiba and I will be discussing how clients can protect themselves and manage their risk. Nasiba, often I have clients come to me and they might be from overseas or just setting up a business for the first time, and they want to make sure that they're doing everything correctly in the UK. My team can help with the compliance side of things, so the accounts, the tax, the statutory matters. But what can you advise my clients to consider in this situation?
So some of the key areas that we help clients with that have businesses is protecting debt and also protecting the key people within the business. So that might depend on what the business does, where it's located, and whether or not it has employees or not.
Right.
So to give you an example, if a client runs their own business, they may do the day-to-day duties, but also they may run the operational side of things. If that person passes away, the family may struggle to continue running that business. They may have extra costs like recruitment costs to try and get somebody to operate the business as well as the day-to-day work. They may have a reduction in profits due to this. There could be a lot of wasted time, and also there may be loss of confidence within the business as well.
Where we've got newer businesses, they might have a lot more restrictions on their budgets and their cash flows. Can you outline how valuable protections such as the policy you mentioned are?
Yes, absolutely. Protection is valuable, it's not tangible, and it's often not thought about enough. Some protection is better than no protection. The younger you are, the cheaper it is. The older you get, the more chance of needing the policy. For example, one of my clients took out a policy 10 years ago to protect him for his business. 10 years on, he needs additional cover when he's reviewing that. Part of that, the premium was loaded by 150% due to his age and also medical condition. Fortunate for him, they didn't exclude any medical conditions within the plan, but that can obviously happen as you get older.
What would you say are the standard policies that most UK businesses would have in place, and are there any that are mandatory? What I'm thinking about here is where you've got a new employee joining the business. What would they expect to see in place?
So employers are required to offer a workplace pension for all employees that are eligible within the business. Other benefits that employers can offer are death in service, private medical insurance, protection, so group protection, they can offer that as well. This can help retain the right type of staff. It can also get people to come back to work quickly and also attract the right type of employees. So some employees look at private medical insurance because they can protect their families, which is a good way to attract the right employees in the business.
So if I've got clients and they've protected themselves well and their business has been successful, they might then find themselves in a position where they've got excess cash. What would you say they should consider to make the best use of their assets?
When we're helping businesses, we look at creating a financial plan. Part of that is short-term, medium-term and long-term objectives. So short-term, it's looking at what working capital they need to keep accessible. Medium to long-term, what do they want to reinvest back into the business? And any surplus capital is looking at long-term investments. So part of that, we'd look at what their goals and objectives are, look at a diversified portfolio in line with their attitude to risk to meet their overall objective and achieve the best result.
I think that it's really important to be able to produce meaningful forecasts, that you have up-to-date live accounting information.
Yes.
And often a business might not focus on that until the need arises. I also think that it's much better to have modern accounting software so that you can extract the information easily. My team can definitely help with this.
Absolutely. So we can help with that. When looking at the financial plan or business plan, it's really important to review it on an ongoing basis, mainly because to achieve the right result. Things can change along the way, so change in circumstances or the objectives can change, and we can alter that plan to make sure that we achieve that over the long term.
Sometimes I find that there can be a focus on achieving tax breaks, and that can cloud the bigger picture and what would be actually beneficial overall for the business and the individuals involved. Do you agree?
Yes, I agree. So when creating a financial plan, we can do that for businesses as well as personal, and they can come together as well. So to give you an example, one of my clients is looking to retire in the next 2 years. Part of that plan, he will be selling his business where he's receiving an income.
Right.
When he sells his business, that income will no longer continue. So it's looking at the most tax efficient structures to generate an income over the long term that's sustainable, and we'll use forecasting models as well to show the sustainability long term. This will take into account things like inflation and costs and charges of particular structures.
If a client comes to us and they've already made their investment or they've already sold an investment and they haven't done it in the most beneficial way, can anything ever be done to help improve that situation?
Absolutely, we can always help clients. What we would look at is the structure of the investment and look at the most tax efficient way and look at maybe restructuring it if need be.
Okay.
So an example of this is a client of mine sold their business last year and paid a large amount in capital gains tax. We looked at a tax efficient investment as part of his financial planning forecast, and part of the plan he was able to receive 30% income tax rebate. He was able to defer his capital gains tax by 20%. And if he held the investment for 2 years or longer, he was able to receive business relief, which would mean that it doesn't form part of his estate. So because this plan was for his children and the long-term view is to pass on this asset, it was a perfect type of solution for him.
That's food for thought. Thank you, Nasiba. Hope you found this episode useful, and we look forward to seeing you next time.